48.8% of Cathie Wood's portfolio is in these 7 stocks. In this video, I'm going to go through each of these 7 stocks, do a brief overview and look at their valuation and try and understand what Cathie Wood sees in these stocks. Of course, the popular investment manager is known for investing in innovative stocks, and these top 7 are innovative stocks in their respective industries. So let's get right into it. The first stock we're going to talk about, the one where she had the highest weight of ownership, is Exact Sciences Corporation, trading at a price to sales ratio of 5.929, near the lower end of where it has traded for in the last 5 years. This is a cancer diagnostic company which is coming up with innovative ways to catch cancer and save lives. And it's understandable why Cathie Wood likes this stock, because it's changing the industry, and if it's able to reach a broader scale, it could become lucrative and it could earn lots of profits. As of right now, though, it's not profitable on the bottom line and it's losing a lot of money in terms of cash flow from operations. But this isn't new with companies that Cathie Wood invests in. She's not afraid to invest in stocks that are growing fast and losing a lot of money on the bottom line and trading at expensive valuations. The second stock we're going to look at is Zoom Video Communications. And who can forget about Zoom? During the earlier stages of the pandemic, we were all probably using Zoom in one way, shape, or form, either to work from home, to learn from home, or to communicate with colleagues, friends, or loved ones that we were not able to see during the time when we were trying to stay away from each other to try and avoid that potentially deadly virus. And right now, Zoom is trading at a forward PE ratio of 17.53. The stock has gotten hammered as economies have reopened and kids have went back to school, so we're not really using Zoom for school. People have went back to work for most days of the week now, and working remotely is becoming less and less popular, although it is still more popular than it was before the pandemic. And so, longer term, Zoom, of course, is not going to be as popular as it arguably may never be as popular as it was during the earlier stages of the pandemic, but it still has a lot of good use cases. And at this valuation, I can really see what Cathie Wood likes in the stock, although she's not, like I mentioned earlier, she's not really looking at valuations when making investments. She's looking at the innovative aspect of the company, and Zoom is innovating the way we communicate. The next stock is Tesla, and Tesla is one of the more popular companies in the world today, led by a charismatic visionary leader, Elon Musk. Tesla is pioneering the electric vehicle industry. It's been the first one to ramp up production and deliveries to a large scale. Others are trying to reach the level that Tesla has already at, earning gross profit margins in excess of 25%, while others are losing a lot of money on the bottom line. Tesla has achieved profitability. Tesla's trading at a forward PE ratio of 29.81. The fourth stock is Roku. The streaming content enabler is making it easier for folks to switch from getting their content through a cable connection and getting it through a streaming connection, which is obviously more flexible, because if you sign up to Netflix, you can watch it on your home TV, but you can also watch it on your mobile phone when you're on the train going to work or anywhere else, right? So it's innovating in the way we see content. Roku is, like I mentioned, one of those stocks where Cathie Wood is willingly investing in, even though it's trading at a very expensive forward price to earnings ratio of 150. The next stock is Block, formerly known as Square. The company is trading at a forward price to earnings ratio of 43.27. The company is helping merchants with establishing their payment processing and online services, and it's also home to the Cash app, which is signing up millions of new customers daily. The stock is cheapest that it's been in the last couple of years, according to this metric, the forward PE ratio, and so it's understandable why Cathie Wood is attracted to this stock. The sixth one we're going to look at is UiPath. This is a company that helps enterprises optimize their communication services. Think of email communication. Think of when you go online and you want to chat with a representative. UiPath helps companies optimize those chats, maybe automate them, try and avoid having to pay for a live person, whereas you can just get the app and have the automated answers to respond to frequently asked customer questions, and that's going to save money for businesses. Again, expensive stock trading at a forward PE of 226.46. Finally, Shopify is the last stock that the least weighted ownership of the top 7 in Cathie Wood's portfolio. Shopify helps merchants establish an online presence. Of course, it was really popular during the earlier stages of the pandemic when brick and mortar businesses had to shut their stores for non-essential services. If they wanted to continue making sales, they needed to have a website or an app. That's where Shopify came in. It acquired hundreds of thousands, if not millions, of new customers. And now that economies are reopening, Shopify's growth is decelerating, and that's what's caused its valuation to come down from a price to sales of 60 down to a price to sales of 9.692, the lowest this stock has traded for in the last 5 years or so. However, that doesn't mean it's cheap when we're looking at a price to sales ratio of 9.62. If it was a price to earnings of 9.62, we could say that the stock is cheap. All right, there you have it. These are the top 7 stocks in Cathie Wood's portfolio that make up 48.8% of her ARK Innovation ETF. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.